Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 6th, 2025, and we are diving deep into Alphabet, ticker symbol Google. There has been a tremendous amount of news recently, primarily centered around their blockbuster third-quarter earnings report released just over a week ago on October 29th. Alphabet absolutely crushed expectations, reporting earnings per share of $2.87 versus the $2.27 consensus, on revenue that hit over $102 billion for the quarter. This performance was largely driven by incredible growth in their Google Cloud and advertising segments, both of which are being significantly bolstered by their advancements in AI. The market reacted explosively, with the stock jumping over 6% in after-hours trading following the announcement, fueling extreme bullishness among retail traders who are now hailing Google as the potential next $4 trillion company. Now, let's turn to the charts to see how this powerful fundamental news has translated into price action. Looking at the daily chart, we can see Google has been in a strong, consistent uptrend for the majority of 2025. The most dramatic feature here is the massive gap up on October 30th, the day after the earnings were released. The stock closed around $274 on the 29th and opened the next day at an incredible $291.59, marking a new all-time high. However, what happened next is crucial for traders to understand. Despite the massive gap up, the price sold off throughout the day, closing much lower at $281.48. This created a large bearish candle, which often suggests that early buyers took profits and institutions may have sold into that initial surge of strength. Let's zoom in on this recent price action to get a clearer picture. Focusing on the period from late October to today, that October 30th candle is very telling. Following that initial volatility, the stock entered a period of consolidation, trading within a relatively tight range. This is healthy behavior after such a massive move, as the market digests the news and establishes a new value area. We can clearly define the boundaries of this consolidation. The upper resistance of this range is around the $286 mark. The lower support has been established near $277. Notice that the volume during this consolidation period has been significantly lower than the volume on earnings day, which is typical and suggests a temporary pause rather than a reversal. Now, let's switch to the hourly chart to analyze this consolidation range with more granularity. Here on the 1-hour time frame, the range between $277 support and $286 resistance becomes even clearer. The price has tested both the upper and lower bounds of this channel multiple times over the past week. What's happening right now is particularly interesting. Over the last several hours, we've seen a strong push towards the top of this range. This suggests that bulls are attempting to regain control and push the price out of this consolidation pattern. A sustained break above the $286 level on the hourly chart would be a very bullish short-term signal. Finally, let's look at the 15-minute chart to see the intraday momentum for today, November 6th. The price action today has been decisively bullish. We can see a strong upward trend throughout the session, with the price consistently setting higher highs and higher lows. This intraday strength is what's fueling the test of the key $286 resistance level we saw on the hourly chart. Buyers are clearly in control in the short term, reinforcing the bullish case for a potential breakout. So, to bring everything together, the fundamental story powered by AI and stellar earnings is incredibly strong. The long-term technical picture is a clear uptrend. After the massive post-earnings gap up, the stock has been in a healthy consolidation, and now it appears poised to make its next move. Let's recap the critical price levels to watch. The most important resistance is the all-time high at $291.59. Before that, bulls need to break and hold above the immediate resistance at $286. On the downside, immediate support is the bottom of the current range at $277. A break below that would open the door to test the top of the earnings gap, a major support level around $275. So, what are the likely scenarios? The bullish scenario, which I believe has about a 70% probability, is a breakout above $286 in the coming days. This would likely be driven by the strong fundamental tailwinds and could lead to a swift retest of the all-time high at $291.59. Look for an increase in volume to confirm this breakout. A neutral scenario, with a 25% probability, involves the stock continuing to consolidate within the $277 to $286 range. This isn't bearish, it's simply the market taking more time to build energy for the next move. Finally, a bearish scenario, which I see as a low 5% probability, would involve a decisive break below the $277 support. This would signal weakness and could lead to a gap fill scenario, potentially taking the price back to $275 or lower. This would likely require some broader market weakness or negative news to materialize. To summarize, the evidence is leaning heavily bullish, but a breakout above $286 is the key confirmation to watch for. Thank you for tuning in to Explain the Charts. Please remember, this video is for informational and educational purposes only and is not financial advice. Always conduct your own research and due diligence before making any investment decisions. If you found this analysis helpful, please hit the like button, subscribe to the channel, and we'll see you in the next video.